Can the Reliance Nippon Life Smart Total Advantage Return Plan secure your family's future while building your financial assets? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now before analyzing this policy, let us first understand what is this policy is about. So this is a non-linked participating individual life savings insurance plan. Now some of the key features of this policy are there are two plan variants available, which is the life variant and life plus variant. And you also have life insurance cover you for a fixed time or a whole of your life, that is up to 100 years of age. And you can increase your income in the form of cash bonus, if any, starting from the first policy year till the end of the policy term. And there is also something called guaranteed loyalty addition, which is a one-time payout or lump sum after the completion of the premium payment term. And you can also choose to pay your premiums for a limited period, or like 8, 10, 12 or 15 years. And you have the flexibility in this policy to later accumulate and later access your survival benefits, that is cash bonus and guaranteed loyalty additions. These are the key features of this policy. Now let's take a look at the benefits of this policy. So first of all, there is something called death benefit, which is given to the nominee or the legal heir in case of unfortunate death of the policyholder during the policy term. So if the policyholder has chosen the life variant, then the death benefit would be either sum assured on death plus the terminal bonus if they had any, or 105% of the total premium paid as of the date of death of the life assured. So whichever is highest in value at the time of death, that will be given as the death benefit to the nominee. So the sum assured on death here is equal to a higher of 11 times the annualized premium or your base sum assured. So this is the death benefit if you have chosen the life variant plan. But if you have chosen the life variant plus plan, then the nominee will receive a lump sum benefit as specified in the life variant. But however, the policy will continue in addition to the above lump sum benefit payable on death. The claimant will also continue to receive the survival benefit and maturity benefit as and when due without the requirement to pay future premium. Next is the survival benefit. This is same for both the variants, which is given to the policyholder once the policyholder survives till the end of the policy term. So this is a cash bonus which will be paid to you at the end of each policy year, starting from first policy year till the end of the policy term. Additionally, a guaranteed survival loyalty addition will be paid to you as a one-time benefit after the completion of the premium payment term. So the policyholder can choose any of the following options to receive survival benefits under this policy, as you can see in the screen. Next is the maturity benefit, which is also same for both the variants, and whichever is higher in value. So the maturity benefit is also same for both the variants, and it will be given once the policy matures to the policyholder, and all the following benefits that you can see on the screen will be given to the policyholder as maturity benefit. Now let us take a look at the advantages and disadvantages of this policy. Let's start with the advantages. So the advantage here is that you can avail a loan of up to 80% of this policy's surrender value, and riders also can be added to increase the coverage. And premium payment are here flexible with options to pay annually, semi-annually, quarterly or monthly. The disadvantages would be the life coverage offered in this policy is inadequate, and withdrawing the survival benefit to annually may lead to unnecessary spending. Since this is a participating policy, the benefits here are also not guaranteed. So these are the disadvantages of this policy which you need to consider and then choose to decide to invest in this policy. So now, as we have a basic understanding of this policy, let us evaluate the potential returns of this policy to better analyze whether investing in this will be suitable or not. So that's why we are going to calculate the IRR, internal rate of return of this policy. So let us assume, just for calculation purpose, that a 40-year-old male has chosen to invest in this policy's life option variant with a 20-year policy term and 15-year premium paying term, contributing an annual premium of 1.5 lakhs. He opts to accumulate the survival benefit, which will be paid alongside the maturity benefit. So here, as this is a participating policy, we are going to assume two investment rate of return like 4% and 8% to better understand the worst and best case scenario of returns. These are not guaranteed returns, or these are not showing you this is the minimum and maximum returns you can earn from this policy. This is just for an example purpose to show you the worst and best case scenario. So the actual maturity benefit will vary based on the policy's performance. Now, if you calculate the IRR based on the RNL star plan maturity calculator, at 4% return, the estimated fund value is 31.54 lakhs, which results in an IRR of 2.59%. So this is a IRR which is lower than the typical savings account interest rate. So this is for worst case scenario, right? So if you take a look at the best case scenario, you will see the projected fund value is 47.83 lakhs, but it gives you an IRR of 5.74 lakhs, still lower than the interest rate on bank fixed deposits. So as a participating policy, we are investing in it for long term and we are taking such risk, but still in the worst case scenario, it's giving us a return which is comparable to savings account interest rate, which if you have not invested your money for anywhere for such a long time and took any risk, still savings account would have given you slightly better returns. So what is the unique value addition here? And if you take a look at the best case scenario, even then it's giving you returns lower than bank FD. So it's giving you lower than a bank FD, which is a debt kind of fund. So in that also you can get guaranteed returns, but here you are not even getting guaranteed returns. That means best and best case scenario, the returns can also go even lower than this. So that's why, as you can see, the rate of return here is not keeping up with inflation, making it difficult to meet the rising cost of our future financial goals. And additionally, the life cover provided here is also insufficient. So given its low life coverage and modest returns, this plan falls short as a suitable option for long-term investors. So what we are going to do is we are going to compare this RNL star policy with other investments or other alternative investment strategies, just to see if we can get more favorable results by going outside of this policy where it combines life coverage and investment and separating these two components to yield us more favorable result. So what we are going to do is we are going to invest in insurance and investment separately. So we are going to opt for a pure term life insurance policy with a sum assured of 20 lakhs, which comes with an annual premium of 23,900 for a 20-year policy term and a 10-year premium payment period. So this leaves you with 1,26,100 rupees annually, which can be invested based on your risk appetite. For the first 10 years after paying the insurance premium, the remaining amount is invested, and for the next 5 years, the full premium is allocated toward investments. So low risk investors could opt for debt instruments like the Public Provident Fund (PPF), while high risk investors might prefer equity investments such as equity linked savings scheme (ELSS) funds. So in this comparison, we will consider both. So by the end of the term, the PPF account is projected to grow to 50.27 lakhs with an IRR of 6.11%. On the other hand, the pre-tax maturity value of the ELSS fund is 95.78 lakhs. So after accounting for capital gains tax, the post-tax maturity value here is 86.48 lakhs, resulting in a post-tax IRR of 11.74%. So in both cases, the rate of return significantly outperforms that of RNL star policy, making it a more effective investment strategy for wealth accumulation and accelerating your investment journey. So what is the final verdict on this policy? Is Reliance Nippon Life Smart Total Advantage Return Policy worth investing or not? This is a traditional endowment plan that offers life coverage while encouraging regular savings for future financial goals. It also allows customizations of payout based on your financial needs. However, key benefits like the death benefit, survival, and maturity benefit are non-guaranteed as they rely on bonuses. So the sum assured here is also insufficient to provide adequate financial protection for a family. And the combination of limited life coverage and relatively low return makes this policy unsuitable for those looking to build wealth. So as an investor, it's essential to evaluate your risk tolerance before starting your investment journey. So what you can do instead of investing in an investment cum insurance policy like this, you can separate insurance and investment and invest in it separately. Like securing an adequate life insurance policy at a higher coverage, even at an affordable premium, can actually help you build wealth because it will free up amount for you to invest, and you can invest by building a diversified investment portfolio which can give you inflation beating returns in the long run. So keeping your insurance and investment separate is crucial to build wealth in the long run.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.